everyone. My name is Nicole Pringle, and I'm the president of Gullah Business of Charleston. Today, I have a special guest here to tell us all about life insurance. Her name is Jasmine Sawyer.
Hi, everyone. Thank you for having me on on the show.
So, Jasmine, we know that it's tax season, and we want to make sure that our viewers are resourceful with their money because, in the Black community, the money comes in and the money goes out very quickly. And I know you have all the tips, the ideas so people can make sure that their money is working for them. So could you tell us about life insurance, the importance behind it?
Sure. The first thing I want to start off with, I'm a Christian, so I'm going to have to go to church on y'all for a second. I have Proverbs 27, verse 6. The wounds of a friend are trustworthy, but the kisses of an enemy are excessive. Meaning, I'm not going to sugarcoat anything for you guys. A friend is going to tell you the truth. Okay. That way you can better yourself. Um, I work at Mutual of Omaha. I'm an advisor there as an insurance um, advisor agent, you can say. And why I got into this field is to help people more so in our own community learn the importance of how life insurance is more than just a benefit for those that you leave behind. It's something that can work for you as you're alive. And you can build a legacy not only for your children, but your grandchildren, which is something that we as a community need to strive more to do because we've done it so many times before. Look at Black Wall Street, So this is an avenue for us all to use to help better ourselves.
So when we're talking about insurance, what type of coverages does Mutual of Omaha offer?
Well, we offer a lot. We have critical illness, we have term, we have whole life, we have I IUL, also known as universal life. But before I go into the different coverages, whenever you're speaking to an agent, the first thing you need to ask is, or no, the agent should go through what's called a needs analysis with you. That means they're going to go over what's going on. What is your situation in life? Do you have a mortgage? Do you have a student loan? Do you have a car note? Do you have any type of debts whatsoever? Because that's something that you don't want to leave your loved ones behind carrying the bag for. Then you ask, okay, do you want to build up cash value for yourself to help toward your retirement as you're living and emergency expenses as you're living? You want to bless your loved ones while you're no longer here, but you also want to be a blessing to yourself while you are still walking the earth. You know, um, the difference between term life and whole life insurance is very important for you to know. I would say go with a term life product if you have a mortgage or a car note. Those are big loans, but they're temporary loans. They're not going to last you for the rest of your life. You'll probably have a 30-year mortgage that you'll have to pay back, or 15, or fixed variable, whatever you have. It's not going to last you for the rest of your life. So that's what's called a short-term loan. Same thing with a car note. Same thing with student loans. Those are big loans, but you're not going to have to pay them until you're 100 years old. Student loans, I don't know. But the other ones, you're not going to have to pay for forever, for the rest of your life. So that's something that you will cover under a term life policy. It's something to cover, yeah, the mortgage, say you're no longer here. So now the house is paid off and your spouse and your children still have a roof over your head, especially if you're the sole provider, to worry about. They can mourn you without worrying about their own well-being. The car can be paid off. Your student loans, just because you're not here doesn't mean that the creditors stop attacking. They just turn their focus from you onto your loved ones. And that's something that you want to try to avoid for your loved ones. So that's term life. However, keep in mind, term life does not build cash value. Okay, it's a protection. So you can get like if you have a mortgage and your house is worth, you owe $300,000 worth on that. You will say, okay, give me a $300,000 term policy. But wait, you still owe $20,000 on your car. Okay, so in your needs analysis, you need $320,000 on your vehicle. Okay, 320, I mean, on your term. That's 320. Okay. So what if you have student loans? You keep on adding on with that needs analysis. So that's covering all the different stuff. And keep in mind, burial. Cremation right now is about maybe $5,000 to $7,000, depending on where you go. Burial could be 15 to 20. So if that's the price of now, how much it costs now to cremate or bury you, you have to think, look at inflation. Look how much the dollar keeps going up and up and up and up as the years go by. So you want to make sure that you have enough to bury you or cremate you, whatever your preference is. That way, you're not put in a pine box, and just left somewhere. You want your family to grieve you because it's going to be hard enough losing you, but without stressing over what to do next. So that's the term policies, not building up any cash value. However, it is protecting your loved ones in the case of you not being there anymore as the primary breadwinner and against all the debt that you leave behind, if any. Then you have a whole life. Now, a whole life is great, but you're going to have to pay it from the time you get it all the way up until you're no longer here. So if you live into 100, 120 years old, that's great. But if you spent, say you're 36, you're going to be paying on that policy from age 36 to 100, 120 years old. That's a whole life policy. And if you have a face value of $50,000, that cash value is not going to go past $50,000. And it will take you still all the way up until age 120 to get to it. So you're building up cash value with a whole life policy, but very, very slowly. And it costs more to get, a whole lot more to get than term. Now, I'm not trying to turn you against a whole life because at the end of the day, you're still going to need insurance to use to bury you with or cremate you with and to take care of your debts. So you say, okay, Jasmine, what can I do? Because term is great, but I want to build up cash value. And then you say, whole life, it's okay. But dang, I don't want to have to pay that for the rest of my life. And I said, okay, let's customize something for you with an IUL, also known as a universal life policy. What that does is it gives you the best of both worlds. Now, my favorite thing I ask my clients is, what's your budget? And when I say your budget is your comfortable budget, I'm not trying to sell you a product. I'm trying to give you something that's going to build up your generational wealth, something that's going to help you sleep better at night, and something where you know that in the event of your loss, your family is protected. And even though you may be receiving a pension from work and building up your retirement and your 401k or your 403b or whatever you have going, you're building up extra for yourself, no matter if you're laid off from that job, you're working somewhere else, or where you're at, you have that nest egg for yourself, which is very important. And we in our community, we don't think about the future because we're so busy thinking about getting through today. And I understand that, but it's time to start building like our ancestors did before us, because they did a lot of great things and we can do the same thing. So with an IUL, what I usually do is I customize a product. I say, okay, what not only do you want to pay per month, which is your premium, that's what that's known as. The face amount is known as like that 320 we were speaking about, how much you need. But what do you want by the time you're 55, 60, 62 in cash value? What are you striving to save for? What are you trying to gain? And we customize a plan for you. And you decide how much you want to pay. Of course, there's a target premium, so one that you can't go below. However, you decide how high you want to go, all the way to down how low you want to go. I'll show you how much that will generate for you by the time you hit a certain age. Um, it's an awesome thing because it's building up cash value. However, it's IRS tax deferred because it's life insurance. So the cash value is never going to go above the death benefit. So your beneficiary is going to be gaining that death benefit, which is going to be more than the cash benefit. Now, keep in mind, you're like, well, Jasmine, my cash benefit growth is building up a whole lot faster than a regular whole life policy does. Why is that? Because it's tied into the stock market. But at the same time, it's not, it's not a variable product. Now, there are IULs that are variable, that are tied into the stock exchange where you're going up and down. But with this, you don't have to worry about it. You're never going to go, your money is never going to go down. It's always going to go up, and it works like a machine. The more money you invest into it, the more you get out of it. The less you invest into it, after a while, if you only put a few dollars into it, then after a while, it is going to die. That's the truth. But if you keep up with your premium, with your monthly rates, and just keep paying what you need to pay, and sometimes even pay more, you're going to end up above and beyond. And when you speak to an agent, make sure that when they're going over all of this with you, they're showing you the illustration. One of the things I love to do is show an illustration of what they're customizing so they can see the numbers for themselves. So if they're with
So
me, I show them the screen. Or
So
if
I was
not,
gonna
I'll see.
say, what is a red flag? Because scams are out here like crazy. What would be a red flag for a customer? You would say, look out for this when you're speaking to someone, when they're trying to get life insurance. What red flag?
If someone is selling you a life insurance product, it's like, keep in mind, everyone has wisdom. You have to use your wisdom. Well, not everyone has wisdom, but we have wisdom enough to know when someone is trying to treat this product as if they're a used car salesman. You know,
Mhm.
insurance should not be pushed upon you or thrown upon you like you need to buy it now. No, no, because you do need it. I'm not going to say that you don't, but you need to go through what I said in the beginning, a needs analysis. Don't just get a product because someone says, I need it. I spoke to someone the other day, example. And keep in mind, agents are tied to what's called a HIPAA law. So just like doctors, we can't disclose names, addresses, phone numbers, anything. So even now, you can hear what I said. A client of mine that I had, let's just say, use that as an example. Um, I asked them. I said, "Okay, you're getting insurance. You're getting insurance for your daughter. That's great. However, do you have any insurance on yourself? Because God willing, for the majority of us, we go before our children. You're the breadwinner. So your daughter's getting all of this insurance, which is great. But I said, before your daughter gets this insurance, let me hold that button for a second. Do you have anything on yourself?" And the parent said, yes, very proud. I have $2,000 worth of coverage. And I said, huh, that's not enough to even cremate you. So your daughter's going to have everything she needs. It seems like in insurance, those are red flags because most insurance companies won't give a parent insurance. A parent insurance on their child unless they're insured, because it's a sad thing. But back in the day, parents started knocking off their own kids to gain the money from the policy. Yeah, that's crazy. So, one of the things an agent will ask you is, do you have insurance, or should ask you, do you have insurance on yourself? You're the primary breadwinner before you get it on your child. Truth be told, getting insurance on your child is great, but a lot of these policies you can add on what's called a child rider. So if you get a term policy, like say at Mutual of Omaha, like with what I would do is say, I'll get a policy for you, that person who needed that $300,000 for the house, $20,000 for the car note, whatever, to leave the children behind and their spouse. Say they get a policy for $500,000. I will say, okay, add on the children's rider. That will protect, that will add coverage for your children or even children you haven't even had yet, you know? So God forbid something happens to your child, that child is covered for $10,000. God forbid an event happens on your policy as a child rider all the way up into the age of 18.
Wow.
Some even go toward 21. Yeah. And it doesn't even cost that much to do. At the end of the day, you protect your children by protecting yourself. Make sure that you're covered. Make sure, as the breadwinner, you have a policy enforced for yourself that is not a $2,000 policy, but enough to bury you, take care of your debts, and make sure your children are taken care of when you're no longer here. Now, if your child is an adult that is well off, taking care of themselves already, you don't have to focus so much on it. But say you do want to leave them a little something and let them know that you were still thinking about them, then you can say, okay, I'll throw in an extra $5,000 or extra this or whatever. That all goes in your needs analysis. Okay. So I will say to you, all you parents, make sure that you have the coverage that you need on yourself, that you're protected. You know, I can say I practice what I preach. You know, my spouse and not my husband and I, we made sure, you know, we're fine because we don't want our children to ever be left in a bad position, God forbid. You know what I'm saying? You have to make sure that you're covered in the amount that you need. That way your loved ones are taken care of. That's your future. They're your future.
So, what if you're a person like, well, you know what? I have a lot of pre-existing conditions. I don't have no life insurance. You know what? I'll be fine. I have money in the bank. I'll be fine. Um, what would you say to someone like that?
I come across that a lot. I'll say, how old are you? If you're 45 and up, if you're 45 and up, it doesn't matter that you have existing conditions. You know, it pretty much matters, okay, this is the premium rate because that's called at Mutual of Omaha a living promise policy. So it's for ages 45 to like I think 83 or 85. And you can get from $2,000 all the way up to $50,000 of coverage. And the rates are very reasonable. You know, you don't have to go through underwriting. So, you know, you get approved almost right there on the spot because it's for people who are, you know, older. So if you have a condition like asthma, high blood pressure, or something like that, a living promise is one that I will say, okay, you may have all these conditions, but here's a loophole. Here's where you can still get protection for yourself and for your family at a reasonable rate without having to go through the underwriting process of having a paramedical examiner come to your home and draw blood or check your height and your weight and any of that. So, you know, it's ways, you know, you just have to know who you're speaking to. And if the agent that you're speaking to knows the products that they're, you know, telling you about from the company that they're working for.
I was thinking about this because I know, we're all here. We're not here for a long time. We got everybody has a day that we exit, right?
Yes.
And though we don't want to talk about death, but that's part of life. Um, just thinking about it, for me, I'm extra, right?
Mm-hmm.
So I took out a little bit more, like you was talking about earlier.
Mm-hmm.
People are like, well, you have to have a funeral, and I want to be yeah, I don't want to be cremated. I want to have my casket. I want my casket looking a certain way. I got a certain color. So if you're anybody like me, you got to put that in your head. I got the certain color, what it says. I want the horse with the carriage. And so if you are someone like me that's extra, you
Yeah.
might need to take that into consideration. Well, she wanted this. If you don't have enough to cover anything, people, your family or whoever is left, you don't want to leave nobody stuck.
I'll be honest with you, you know, whoever you leave, whenever, and I think I told you guys this before, whenever you get a life insurance policy, make sure that you have a will in place as well. And you leave the right person in charge, the executor of the estate in charge of that will. You know, family is family, but when it comes to money, that changes people, you know, especially in our community, we know. So, what you want to do is get an estate attorney if you could afford one, you know, to get an estate attorney, God forbid. Well, when the time of your loss comes, you'll have that professional read out your will. There's no quarrel about it, there's no nothing. And then the yeah, life insurance is going to pay out who you listed as the beneficiaries on it anyway, you know, but that will is that extra so you don't end up in probate court because that's a very long drawn out experience that nobody wants to experience, you know. Having a will in order is something that I will always say is important. Um, I bring that up because you say a horse and a carriage and a buggy. You can really have family members that say, I'm not going to buy all of that. She's not even here anymore. How would she know? She's going to get a basic funeral. And I'm going to take that extra $10,000 that she put in there for the horse and buggy and pay off my car note. She's not here anymore. She won't miss it, you know? So you have to keep that in mind, you know, unless you're leaving that money to someone you know is going to honor your wishes, be smart and be realistic. You know, when it comes to money, people will say, I'm going to do this, I'm going to do that. But even Jesus Christ's disciples said, I'm going to ride with you all the way into the end. And then he denied him 3 times and the cop crowed. You know, life is life. You don't know what you're gonna do until you do it. You don't know what you're gonna do until you're in a certain position, you know. But I will say you wanna have at least what's needed in there, minus the horse and the carriage and all of that stuff. You wanna
It's
have,
needed.
you wanna know what's needed to bury you, to cremate you, to take care of your debts, to make sure that your children have a roof over their head, to make sure that your spouse is not left in a stressful situation. It's going to be hard enough not being with your spouse. I can tell you, being married, you know, your spouse gets on your nerves, but at the end of the day, that's your ride or die. You know, that's your best friend, you know, so it's going to be hard enough not having you there. You don't want to add on a financial stress while they're already grieving your loss, you know. Just make sure you have what's needed. I always recommend having an IUL and a term policy. If you're a homeowner and you own a car or you have student loans or any type of debt, make sure you have a term in place. You know, it can be a 10-year, 15, 20-year, 30-year, whatever. The older you get, some like Mutual of Omaha, once you hit a certain age, they're gonna say, okay, we're gonna only offer you up to the 20-year. We're not gonna offer you the 30-year anymore because, you know, mortality rates. So, you know, just make sure with a term life, you're not getting cash value for it, but it's protecting your loved ones in the event of your loss. And to build up that cash value, don't get a whole life, get an IUL. If you're going to go as far as getting a whole life, get an IUL. Now, for that living promise one I was telling you about, the one where you don't have to go under underwriting and you don't have to go under all of that, but it is a whole life policy, it is going to generate cash value. That's the truth. You're going to have to pay it out for the rest of your life. It's a basic whole life policy. But it's at a much better rate. It's at an affordable rate, you know, but don't expect it to build up cash value in a vast quantity like an IUL will. With an IUL, you're going to have to go through underwriting, you know. So if you call your agent or call me and say, hey, I want that IUL, but I don't want to go through underwriting, or I want an IUL, but I just had 2 stents put in, or I'm on dialysis. Okay, well, your premium, let's just hope they say yes to it. And if they do, it's going to be much higher than a person that's younger and standard. By the way, just as a quick refresher, there are a difference with premiums. Okay. When you speak to an agent, they're gonna first tell you about a standard premium, which is someone who's healthy enough. They're the basic American. They don't have all these health issues. They're just standard. They're standard premium. Then you have preferred. Preferred is their health is excellent. You know, they're above average. So that means their normal premium is going to go down. Then you have preferred plus. Dun, 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 they're Superman. Their health is amazing. And their age proves it. So they're going to pay the lowest premium that per month or annually or whatever they decide for that policy that they choose. Your health plays a huge role. Your age plays a huge role. Okay. If you get what's called rated or a table rating, that means just be happy that the insurance company said yes to the dress. Just be happy they even approved you, because most companies are going to say, no, you're too high of a risk. You know, you had too many cheeseburgers. You're not going to make it much longer and you're too much of a risk for us. More insurance companies, they are heartless when it comes to that. When it comes to mortality ratings, that's what they look at. They're going to ask you, do you do parachuting? Do you go hang gliding? Do you wrestle crocodile? Do you do anything that can have you here today, gone tomorrow? Because you're going to either be denied or be paying higher premiums based on your health or based on your lifestyle or occupation. You know, and one more reminder when it comes to that term, say you're young and you get that term policy that's going to last you for 20 years and you're paying $20 a month on it. And then you decide to renew it because you got it at 25 and now you get it and you want to renew it at 45. It's not going to be $20 anymore. That's probably going to go up to $40, you know, $50. And you're going to say, why? I'm getting the same coverage. I'm just renewing it for another 20 years. And my health is still great. Yeah, but your age went up. you're closer to that mortality rating. Okay. So all insurance, no matter what company you go to, is going to be based on your age and your health. The better your health, the lower your premium on that same product.
Was seeing
Mm-hmm. Of
people say they can improve people for like $25. Do they have any type of plans like that?
course. Of course.
So
But
so people can get insurance depending, I guess, on age and health or whatever.
I just sold a policy to a 43-year-old man who came in with a preferred plus rating. He originally had to pay $37 and change at a standard rate. After the
Mm.
underwriters came, did the paramedical exam on him, they said, wow, he has a preferred plus rating. He's only going to pay $20.77 per month.
So that $20, because people waste $20 on stupid stuff. So twenty
And his
dollars.
coverage, yeah, and this man is covered for like $200,000, a little less. Yeah. And the rating, yeah, for $20.77 per month. And he's 43, 44. Yeah, I do
Mm.
it every day. I do it all the time. Insurance is not as much as you think it is, you know. If it you make it work for you, if you want to IUL to build up cash value and build up your death benefit at the same time, go ahead. If you just want a term policy to take care of your beneficiaries to make sure they're protected when you're no longer here, go ahead. If you just want a whole life policy to take care of a few debts that you leave behind or your cremation and burial, go ahead. There's so many different products and there's so many different things that you can do. But the point is, you need to take at least 30 minutes of your time, speak to an agent that is trustworthy. I really do stand behind myself, of course. And Mutual of Omaha, they're a great company. They've been around for plenty of years. Make sure you do your homework on whatever agency you choose. Look at their rating, look at their history, um, and make sure that the agent is asking you about yourself. What are you about? What are your needs in life? What are your family's needs? You know, where are you going? What are your goals? When you speak to an agent, you should be asked these questions. A red flag is when they don't ask you these questions. Say, hey, what can I sell you? I can sell you a $50,000 policy. No. If they're doing that, that's a red flag because that means they care about what's going into their pocket more than what your needs are. And a lot of people look at me and they say, Jasmine, you know, you sold them this policy and you only made because, you know, agents are all paid off of commissions. So I'm like, I'm giving them the secrets to get policies that fit their budgets. I always ask, what is your budget? And when I say your budget, where are you comfortable at? Meaning, if it comes out of your account, you're like, okay, it came out. Opposed to, oh no, how am I going to pay the light bill this month? What am I going to do for the water bill? Oh no, it shouldn't be like that. When you're paying your insurance, it should be okay. It came out like almost like a set it, forget it mentality, you know? So, and then next thing you know, years have gone by and you built up this much in cash value. Or years have gone by, or God forbid something happens. A lot of people also call people I will call and I say, hey, you need a policy? And they'll say, no, I'm fine, I'm fine. And God forbid, like a year or so later, they'll call me back. Hey, um, I need burial money. Okay. How can I help you? Oh no, no, no. This person just died, so I need money. I can't help you
Mm.
because that person's no longer here. Or I was just diagnosed with cancer. I need money. Okay, now you're not insurable because you were just diagnosed with cancer. You know what I mean? I try to help people before life happens. And trust, believe me, people, life is going to happen. We're not supposed to dwell on the earth forever. This is just a holding spot, you know? Christ has bigger and better in store for us, you know, you receive them. But I could tell you, just have what you need in order for yourself, in order for your loved ones, in order for your children. That way, you know, you can do what you got to do. Um, Before I let you go, because I know we're running on the time clock, I could say this. If you just came into your tax season money, I'm not going to sit here and say, hey, take all your tax season money and blow it. No, I'm going to say this. Speak to an agent, make sure that all your needs are covered, and take that $20 or $40 per month, $20 or $40 per month, have all the coverage you need, and sleep well at night. because no matter what you're getting back, even if you're getting $1,000 back or $500 back, you can afford a $20 policy or a $40 policy that's going to bring peace to you, your loved ones, your beneficiaries, and keep you in a safe financial spot. And you also have plans like I'll remind you that can build up that emergency cash and your retirement money. It's so many things that you can do with insurance. You just got to speak to the right agent, the right person, and not all insurance companies offer the same thing. Mutual of Omaha offers a lot. So if you want, you can reach out and I'll gladly help you. Or any of our agents will gladly help you and answer any questions that you have, even if you're just calling to find out information.
So thank you again, Jasmine, for coming on, Jasmine Sawyer. We really appreciate you. This is just part one, guys, of financial wellness. She will be back. Okay. So, Jasmine, you're in North Carolina. Now, let's
Yes.
say somebody's in, I don't know, Michigan. Could you help them in Michigan?
Yes, I'm licensed everywhere. I'm a licensed agent in various states. So do not feel like, oh no, she's in North Carolina, she can't help me. No, I can help you if you're in Michigan. I'm a licensed agent, so I will gladly help anyone that's there. And even like I said, for informational purposes, I'm not going to get on the phone with you and try to sell you a product. I'm going to try to help you with your needs and give you information first and let you decide what you want to do from there. That's how I work.
Well, thank you, Jasmine, for coming on, Miss Sawyer. We really appreciate you. And this is part one, guys. So we will have part two. So if you have any questions or anything, I'll have Jasmine's information listed below. And I want to say thank you, everybody, for watching. Please like this video, subscribe, and comment, please. Anything you want to say, please comment below. And thank you, Jasmine, for coming on.
Thank you, everyone, for having me. I look forward to speaking to you guys again soon.
All right, guys.
Bye, Nikki.
Bye.